Hi everyone. So I'm here with Pete Bulley from Aire, who's the director of product at Aire. And today we want to have a bit of a conversation, just really around some of the things that they've seen in the market through lockdown and how they've been sort of reacting to it. So Pete, very welcome. It's great to chat to you. So what are some of the things that you've been seeing through the whole sort of COVID lockdown? I mean, it's been a big change for the industry, and it'd be good just to hear what you've been seeing with some of your clients.
Yeah, of course. I mean, as you say, there's been a big impact on consumer credit lenders, and I think a lot of that has been about focusing on protecting their existing book and being more proactive in the way that they manage their customers, as opposed to focusing on acquisitions. This has been a kind of traditional focus within lenders.
Yeah. So have you seen a lot of volume come through? I mean, what have you seen it from a volume point of view? Has it been a lot of obviously a lot of focus around how they manage their customer base? And I suppose how's that transpired in terms of some of the products that you've got out in the market?
So I think, lenders have needed to think about different approaches to understanding their customers and assessing their customers, and that's definitely led to an increase in interest in our products. So we're very focused on first party data, and we've been big proponents of first party data directly interfacing with consumers and finding out about their situation, and that's really valuable at the moment. I think the challenge for lenders is that the impact of the pandemic on each individual is very unpredictable. The sector that somebody works in has a big impact, for example. So they're looking for new ways to understand their customers.
What are some of the themes, I suppose, or pieces of data that they don't have, or you think the traditional models haven't necessarily covered very well? Are there specific areas of that really weren't covered before that you think are getting better covered now? Or?
I think one of the challenges is that the financial situation of somebody is changing much more frequently. So the approach of relying on historic data that might be a few months out of date just doesn't give you an accurate representation of where somebody is today. So there's definitely a focus in how can we understand the affordability for a consumer today rather than what their situation might have been a few months ago.
Yeah, and so how do you think that's changed? I mean, what are some of the new drivers that you think are different? I mean, one of the ones that we've definitely talked about has been around like industry or industry segment, and there's some good ONS data I've been talking about, which looks at the impact by segment. I mean, is that something that sort of that you've seen, or is it? I mean, and are there other kind of indicators that really people should think about?
So definitely that's a good example. And one of the advantages of the approach that we take is we can also be more direct in the type of information that we capture. So we were able to very quickly at the beginning of the pandemic start to ask more questions about the impact that COVID is having directly, so that we're not relying as much on the proxy of the industry that they're working in, but also what's happening in their specific their context, the company that they work for, and what's the impact been to them.
So I think industry is probably one of the drivers, and I got challenged the other day around at the end of the day you do have to make things at an individual level, right? So even if someone's working in industry, I mean, it has to be around their individual situation. I think what's interested me, I suppose, particularly when we've been chatting before, has been sometimes there are indicators that aren't necessarily intuitive but might be predictive. So employment industries is like one that's quite intuitive, but I suppose it's that whole sort of machine learning and finding other linkages or other correlations that could potentially be predictive, down the road. If there is some sort of causation, then at least there'll be a correlation.
Yeah, I think that can be true, but at the same time, in our approach, we try to keep things relatively simple. We're not focusing on very kind of abstract data points with customers. And when you think about affordability, which is obviously very relevant at the moment, then really it is about the impact to the income of an individual, and also how their spending habits have changed and their attitudes towards finance.
I suppose that links into like explainability as well, right? Which I know, I mean, that's been a big theme with machine learning in financial services, is making sure it is explainable.
Yeah.
I mean, does that I mean that kind of connects in? I would have thought. So what you're doing is making sure it's logical, so therefore explainable as well.
Yeah, absolutely. I mean, we try. It can sound counterintuitive, but we look for the simplest ways to build models because they're going to be more explainable. And of course, there's more attention from the regulator at the moment, which is absolutely right. But lenders and providers of insights like Aire need to make sure we can explain the insights that we're providing.
Scoring. So on scoring, I suppose, and models are used widely across, particularly the financial services industry, but outside of that too, in utilities and telecommunications, etc. I mean, obviously, it's used in the acquisition process, but then it can also be used in the back end collections process as well. And how far off do you think the models are going to be? I mean, so what happened historically in the models? Or in historically on a customer's account, or in terms of their attributes, for example, the bureau might not necessarily be representative of what's going forward, which seemed like that'd be an area where you could kind of augment with some of that data. I mean, what's your perspective on the scoring? Do you think it's going to be predictive, or do you think it's going to it's maybe going to be less predictive? And then what are the consequences on that on the industry? I mean, firstly from a collections point of view, but also from an acquisition point of view as well.
Yeah, I think that, as you allude to, the existing models that lenders have might not make sense anymore, and they do need to, and they are. A lot of lenders are thinking about how they can adjust their models, and a lot of that is thinking beyond the historic financial data and transaction data that is often driving a lot of these models, and looking at other data sources and alternative approaches to help them better understand the situation that a customer is in.
Yeah. Okay. It's interesting. I'd just be interested around. It's going to be interesting around whether that's going to create an opportunity or not. So if you still use your own models, your old models, I should say, historically, and they're not necessarily being predictive, is that going to be sort of like leaving money on the table? In terms of either under predicting or over predicting, or even segmenting in the wrong segments as well. And is that going to represent an opportunity? Is that going to be a hot topic for folks? I think in the next sort of 6 months. I'm not sure your view is.
Yeah, I mean, I think that's already happening. I think lenders have been talking to different providers of data and looking into different approaches to augment what they already have, so that they can take the segments that are getting left behind and get richer data.
And what about gathering the data? I mean, digital has been a big theme that's come out through the lockdown, and people have been very interested in like how can they use digital really to augment capacity, to provide additional processing power and those kind of things. But I suppose the other aspect, the flip side on digital, is you've also got a good way of sort of capturing additional data and capturing additional evidence. I mean, if in terms of the information you're seeing, the extra information you're seeing gathered, I imagine it's digital. But I mean, how are you thinking about that in terms of the best way to kind of capture it?
Yeah, so I mean, I think particularly in customer management and collections, we've seen an acceleration in the adoption of more digital approaches. I mean, I think acquisitions has been ahead in that space, and certainly in terms of capturing evidence, some lenders already have capabilities around that, and we at Aire would typically sit sort of further up the funnel, so we're helping to capture data from individuals, but less uploading bank slips and that sort of evidence. And lenders should be asking for that when they need to, but hopefully that can be on a smaller population.
I mean, I do think digital is a really interesting way of sort of getting that extra information, and you sort of got it stored as well. Which we were chatting earlier a little bit about gathering some of that information earlier, then you can use that for the modeling piece sort of downstream. I mean, that seems like quite a smart thing to sort of approach to do. So I mean, how should people think about gathering first party data? I mean, one of the things I've been talking with people about is through the lockdown is a really good time to try and gather data, right? It's a good time to capture data. any kind of guidance around doing that? I mean, because I know you've been doing that from a modeling point of view, but it'd be good to just get some themes in terms of, what's the best way to do it? What kind of data is worth doing? What kind of like infrastructure do you really kind of need, I think?
Yeah, so we've done a lot of research in this area because we want to make sure that the experience we provide is appropriate for consumers and that they're going to engage in that. And I think actually a lot of the adoption of the more digital approaches is driven by what consumers are looking for. A lot of people would rather fill out, a simple form or engage with something on their phone, as opposed to have a long phone call with somebody where they might feel a bit more judged or a bit more uneasy about providing that information. And that needs to be done in a way that is secure and is safe and with proper consent. But I think increasingly there are ways to do that through digital platforms that consumers are comfortable with than perhaps they would have been, even 5 years ago.
What's your view on the lockdown? Do you think it's generated additional adoption around digital? I mean, I think it's quite interesting in terms of customers who may not have even considered using digital contact channels or digital ways of contacting people. All of a sudden, we've been forced into doing it because we can't go into a branch anymore, or we can't, the capacity isn't there to necessarily be able to call up and talk to people, and so we've almost like been forced to adopt digital technology, even video calls like this, right, which we've all been watching, right? And I just wonder if that's sort of penetrated digital into a new sector that maybe didn't exist before.
Yeah, I think that's probably the case. I mean, as you mentioned, a lot of lenders, even if traditionally they were handling a lot of customer management or collections interaction through phone calls, they've not been able to have, particularly early in lockdown, as many agents available. And so often consumers that were calling up, or in the past where they would have sent an email asking them to make a call, they're instead trying to divert people to these digital channels to create that operational efficiency. And I don't think that's something temporary, because actually I think lenders and consumers will see the advantages around interfacing in that way.
I'd be interested to see if there's extra adoption, and particularly there's some interesting graphs you can look at where it's digital adoption by age group, and just if that graph kind of changes as a result of the lockdown. I think that'd be interesting, because some of this stuff is actually pretty easy, right? And you can actually, in terms of facilitating from a service point of view, from a consumer point of view, you can get answers very quickly. And I think sort of people start to see some of the benefits of some of that. So one of the other pieces that's quite interesting in that is response rates, and how do you drive response rates? So we talked a bit about digital adoption, and how people will now responding more to digital interaction. But any tips or thoughts around how to generate the best response rates in terms of like questions to ask or formats or those kind of things when people are thinking about that? I think that'd be quite interesting, because obviously you're doing this as part of your service, right, as well. How should people think about it?
Yeah, so I mean, this is definitely a huge focus for us, and we've done a lot of generative user research around this. And it really depends a lot, I think, on the situation, the relationship with the consumer and the situation. So, for example, we've found in some situations a customer is happier being contacted by a third party on behalf of the lender instead of the lender themselves, depending on how they feel the lender might be thinking about them, or the situation that they find themselves in with their lending product. So definitely one component is thinking about the message, the initial message to that customer and the situation they're in, and how they will take that. And then I think what's really important when thinking about first-party data is, for the customer, any questions that are asked need to feel relevant. They need to understand why they're being asked that, because otherwise, they start to lose trust in the process. And so I think it's really important to spend a lot of time on that positioning.
Why do you think the third-party piece works, or rather going via a third party rather than going directly from the lender itself? I mean, what do you think the theme is behind that? It's quite interesting.
So I mean, I think it that's only the case in some circumstances. But if a consumer is in financial difficulty, for example, there are times where they feel quite afraid of a lender. For example, they're worried about the lender getting in touch because they know they're in difficulty and they know that they're having problems paying for their product. And so if they feel like a third party is somebody that's in the middle and is advocating for them as well and trying to help them with the situation, they can feel sometimes more comfortable with interacting in that way.
That's quite interesting, right? So, and it sounds like that's maybe a little bit more applicable in the collection space than it would be, say, upstream.
Yeah, I think so. Because I mean, equally in other circumstances, a consumer might feel that it's strange that another company's contacted them. Why isn't their lender dealing with them directly? So it's it's quite nuanced.
And you mentioned there about relevant questions and making sure the questions are relevant to people. How nuanced do you think that needs to be, and what's the best kind of approach to? What do you think the best approach is to try and pull some of those things out? Does it have to be different for every single customer? How much can you pre-think some of these things? I imagine these are some of the things you've probably had to think through.
Yeah, I mean, I think certainly you can't have a standard set of questions that you're asking if you're trying to identify information, because it will start to become irrelevant for that individual. So having very dynamic journeys, I think, is important. But equally, we talked about explainability from a regulatory standpoint, but also just as you're interacting with a consumer, making sure that you're providing additional explanation about why you're asking something helps give them the context.
And what about things like complete rates? I mean, so if you have a really long kind of, you're gathering this extra information to sort of help with this segmentation sort of downstream. If you have a really long kind of questionnaire, and you can sort of it could be people just get bored, right? And they never get to the end of it. How do you think about completion rate? And are there ways to sort of keep people engaged through it? I mean, that must surely be part of it.
Yeah, I mean, so definitely it's important to try and reduce the length of time that you're asking for from somebody, and you have to balance that with the value that you're getting from the information that you're requesting. But equally, I think people are willing to invest in if given that opportunity to explain their situation more and not just have a number that's assigned to them be the extent to which they're being judged around something. I think most people are willing to invest a bit of time in answering some questions. But there's a balance there for sure.
Well, it's really interesting. So it certainly sounds like gathering additional information on the call can provide some additional insight and sort of be fairly seamless in terms of what it means in terms of like segmentation and sort of scoring downstream. I think that's and it certainly sounds like through the lockdown, I mean, it's the same kind of theme in terms of additional digital adoption. Definitely a thing coming through.
Yeah, absolutely.
Well, Pete, thanks very much for the time. I really appreciate it. Very informative, and thanks again. And we'll look forward to chatting soon.
Thanks, Chris.
Okay, thanks.